Hello and welcome back. In today's video, we're going to be talking about why moving averages are broken. Or more specifically, why a moving average crossover strategy or system is broken. By the end of the video, I'm going to prove or disprove that moving average crossover systems are still valid in today's markets. I'm going to do that by looking at my software. I've done a simple program to program the strategy, and we're going to look at a variation of markets, Forex markets. We're going to look at the S&P 500. I'm going to vary the length of the moving average, and we're going to change the time frame of the chart. So we're going to get a good idea, a good variation, and by the end of it, hopefully, the plan is to save you guys some money trading or maybe buying this sort of a system off someone. So watch till the end of the video where we're going to get a really good conclusion. Okay, first things first, what is a moving average crossover system? I know this is pretty basic, but some of you guys are not going to have discovered this yet, but we're going to quickly go over it just to make sure. So a moving average is an indicator that you put on your price chart, and it's just a line. It looks something like I've drawn here. These black marks, they're supposed to represent the price bars, and then you're going to put on one of these lines. One of those lines is what's called a moving average, and there's different types of moving average that we can calculate. The typical ones that you're going to see most people talk about, a simple moving average or an SMA, or perhaps an exponential moving average, an EMA. And for the idea of this study, they're extremely similar. So if one person says to you, no, it's got to be an exponential moving average, it's the only one that works, well, it's a load of rubbish, because they're very, very similar. So whether it's EMA or SMA, they're much of a much. They all work in a similar fashion. So price bars, we're looking at these black dashes, sorry about the drawing, and then once we apply a moving average to the chart, I've applied two, red one, blue one. The blue one is the faster one in this case. It's a 20-period moving average, and the slower one is a 50-period moving average. And essentially what it does is it plots the average of the price, quite often the closing price, over the last 20 bars, and it plots it. And so the lesser amount of bars, the faster it is, the closer it follows the most recent price, and the slower, the smoother, further away. A moving average crossover system is really quite a simple thing, actually. If you've picked up any old trading books or read some stuff online, they were quite a popular thing even decades ago. I like the way they work. It's one of the first sort of systematic type strategies that I picked up, just because very easy to trade, very easy visually. You can pick them up, and the way you trade them, ever so simple. In this case, we're looking for buy signals when the fast EMA crosses the slower EMA. So at this point here, little arrow, at that point there, the blue line, which is the fast EMA, is crossed above the slower EMA. That's our signal, that's our buy signal to go long. And the idea is it's a trend following type strategy. What we do end up typically with is lots of little crosses where the market is sort of essentially moving sideways. We're getting a bit whipped around, and then hopefully the idea is we get a bit of a breakout like this, where the lines stay apart and we ride that trend. If we were to go long here, ride this trend, normally the exit signal is the reverse. So when the fast EMA crosses back down below the slow EMA, that's our signal to exit the long position, or could be to exit the long position and go short. So that's a typical moving average, moving average crossover system. So the idea is to capture trends. What we do now is have a look at the computer and we'll go over some of the charts that I've prepared for you and see how this type of a strategy performs. Okay, just before we actually look at the computer screen, a couple of things just to point out. With Forex, I'm just trading one standard lot, although it will be evident when I show you that we're not really looking at average trade size or lot size. What we're really looking at in this particular test is the equity curve, how consistent signals from this crossover system work. And also, it's worth noting that I haven't included a stop loss. Stop losses, in my experience, typically make performance ever so slightly worse, although you have got the safety of having that stop loss. I wouldn't trade without a stop loss, but for this demo, there isn't a stop loss, so bear in mind that the results that we see are probably going to be ever so slightly worse when we do include some sort of a stop loss. Okay, and of course I've already mentioned that I've programmed this code. It's ever such a simple code. I've programmed it for multi-charts. It's easy enough. You can program it for MetaTrader, MT4, Easy Language, Ninja, AMI Broker, whichever one you want. But for this demonstration, as always, those of you who follow me, you know I use multi-charts. So let's take a look at the screen now and start running through some of these tests on the various markets. Okay, firstly we're going to look at this chart. It's a 60-minute chart of euro dollar, and I just want to show you really what a moving average crossover signal actually looks like. So what we can see both the lines. We have a 5 period and a 20 period moving average, so 5 being the fast cyan line and the 20 being the, I don't know if you'd call it a pink, I suppose, a pinkish line, the 20 period. That's the slow one. And down here, just around where my cursor is, we can see the first cross. We can see how the cyan line crossed above that slower moving average, and we buy on the next bar, the open of the next bar, and we see the price goes up. We follow it until we get here. We get a cross. A bit hard to see, but I believe the code, there is actually a cross, and we get the signal to go short, and then immediately after it crosses again where we get another buy signal. So ever such a simple type of system to trade, just looking for that crossover, and it's pretty obvious whether you're going to go long or short, even if you do get a little bit mixed up. And in the first test, we're going to look at euro dollar. We're going to look at a daily chart of euro dollar with a moving average of a 5 and a 20. So the fast one being a 5, slow one being a 20. It's quite a common number that I see thrown around that people want to use or try and sell. So here it is on the chart, and something I haven't mentioned yet is that all of these tests I've done on the Forex are tested over a 12-year period, so a really substantial amount of past trades for these. So here it is. This is what it looks like on the charts. You can see the dotted green and the dotted red lines are whether it's a winning or a losing trade, and at this particular period of time we see on the screen, it was very choppy. So what I mean is the slow moving average was crossing above and below quite a lot, so we weren't getting into any sort of substantial trend with this, but nonetheless, let's see how it performs looking at the performance report. And that's what the equity chart looks like. Let's make that a little bit smaller so you can see it. And there you go. So the start of the chart is around 2008, and we finish off end of the chart in 2019. And it's quite clear that this particular strategy on the daily chart hasn't really worked very well, has it? Another thing I have neglected to mention is, obviously, when you're trading, we get trading costs. There's costs in the form of spreads, costs in the form of overnight costs, and also commissions. And I haven't included any of those costs in these strategies. So what you'll see, the figures that you'll see, bear in mind that they're only going to get slightly worse once I've included the costs of trading. So quite quickly we can see that even without costs, this is a losing strategy. This isn't something that anybody would want to trade on the daily chart with a 5 and a 20 moving average of euro dollar. Let's look at the next one. We're still looking at a daily chart of euro dollar, but I've changed the lengths of the moving average. Now we're looking at a 20 for the fast and a 50 for the slow. And what you can see is that reduces the amount of trades. So hopefully reducing the amount of whipsaws and to staying in those trades a little bit longer, taking a little bit longer to get in them and staying in them a little bit longer. So let's see the report to see how that one worked. And you can see I guess it's better, but it's still horrible. You can see that there is periods where this equity curve goes up and it's working quite well, but then the following years only to come right back down again and really sort of chop all over the place. If we look at the annual period analysis, this is what it makes each year. So yeah, I mean, okay, 2008 lost money, had a couple of good years, 3 bad years, a very good year, bad year, 3 reasonable years, and another bad year. So ultimately it's choppy, it's all over the place. It's not something that I would trade. It's certainly not something I would recommend you or any of my clients trade at all. Moving on to the next one, this time we've got an hourly chart. So a 60-minute chart, still on euro dollar, and we've got a 5 period and a 20 period moving average crossover. Look at the results for this one. Oh, again, look at that, pretty horrible. You can see more trades have taken, obviously, because it's a faster chart, but still doesn't work. There's periods where it did work, periods where it worked horribly, but overall, we started here with 100,000 and we ended with just under 100 over that sort of 12-year period. So not something that's really tradable, I don't think. Moving on, next chart, we're going to go on a really fast chart now. Now we're looking at a 5-minute chart, and we've got the same 5 period and a 20 period moving average. I actually purchased a system years ago off a guy who was selling this system, 5 period and a 20 period on a very fast chart. And let's have a look at the performance of this. Absolutely terrible. Many more trades again, but I suspect it's more terrible just because it's a 5-minute chart. We're in and out of the trade so quickly that there's just no chance of getting on a decent trend. There's a lot of noise within the market. So perhaps it's just euro dollar, because markets do trade favourably to trends. Some trend really well, some don't trend very well. So let's look at another pair. I've prepared a chart, just a daily chart again, for pound dollar this time, and we're going to look at a 20 and a 50 period moving average, see how that one works out. Early on, made a lot of money, then lost a bit, made a little bit, lost a bit, and overall, yes, it made a little bit of money. Certainly not something that I would want to trade. I want to see an equity curve, start low at the left-hand side of the screen and smoothly move up to the right as time goes on. Your money's increasing, your balance of your account is going up and up and up over time. This clearly isn't. So again, pound dollar, this moving average system doesn't work, and I have tried different lengths. I'm not going to show you now, but much the same story as with euro dollar. They don't work. And the next chart we've got is of the SPX, S&P 500, and we're looking at a daily chart again with a 5 period and a 20 period moving average. If we look at the report, again, it's really horrible. So that's the last chart we're going to look at, guys, and we can make some conclusions from the information that we've gathered here. Well, that pretty much concludes this little test, or the little part of the test that I've showed you. I've done much more work on moving average systems in the past, and if you hadn't already worked it out or hadn't already made up your mind, then I think it's fair to say that on those markets, time frames, moving average lengths, it doesn't work, does it? This type of strategy is nice to think that it would work. It's an easy one to trade, and it probably did work back in the 60s and 70s. Why doesn't it work? I imagine that the markets have become more efficient. More people have obviously got access to trading software and the ability to trade this kind of system really easily. Back in the 60s, 70s, hardly anyone had access to computers and trading software. This sort of stuff was done by hand, and it was particularly profitable back then. But for now, modern day markets, it doesn't work. You know, trading's hard. Finding strategies that are profitable is hard. You know, most stuff doesn't work. I mentioned that I picked up a strategy. I actually bought a trading strategy off a guy. Won't mention any names, but I actually bought a system. It was a day trading system. It was like a 5-minute chart and a 5 and a 20 period moving average crossover. And funny enough, when he was selling the system, he only pointed out the trades that worked. So he filtered out all the little losing trades, and well, he left a few in there, but he showed you the big trends and the big winning ones that did work. It's just dishonest, basically. You've seen from my tests that taking all the trades doesn't work. Sure, you can filter out, you can use some different methods to filter out some of the trades, but in my opinion, there's better ways to get into trends than using a moving average crossover. So overall, I hope that's just been really helpful. I hope that perhaps you won't go out and trade these moving average crossovers on Forex or the S&P 500, and hopefully I'll save you a bit of money and time by doing so. And hopefully it's been helpful for those of you who want to, that have an interest in these rule-based or systematic type trading systems but don't have access to software like I do to test them very quickly. In the past, I've done lots of testing all by hand, and in fact I've been helping out a lot of clients with this type of thing recently. So if you need help with programming or testing out particular systems or any other little problem to do with sort of rule-based trading, then get in contact with me. I might be able to work with you and help you out. You can email me or comment on this video and I'll get back to you. Email me jared@thetransparenttrader.com or visit my website, thetransparenttrader.com. There's lots of information about working with me over there. And that's about it for this one. I hope that's been valuable to you. If you liked it, please click the like button. Please subscribe to the channel for more videos. I'll try and do some more in the near future. If you've got any requests for anything trading related, then just pop it in the comments down below and I'll do my best to make a video and help you out. But till the next time, goodbye.